Let's get your home loan rate down. We understand how important managing cash flow is for investors. That's why talking to one of our brokers can help you find the best loan options and a better rate. Your Finny loan expert will assess your loan and quickly spot a better option if it's out there. With access to over 70 lenders and a wide range of products, you're sure to get the lowest available rate in the market. Stop worrying about your repayments now and take charge of your financial freedom. Contact a Finny mortgage specialist today on 02 8866 2444 or visit our website at www.finny.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, Grace Ormsby here. Welcome back to a brand new episode of the Smart Property Investment Show. And each year we look to get the biggest names, the biggest execs that are working across the real estate sector to give us their insight into what to expect for the year ahead based on what they can see from their position in the market and what we've seen over the last 12 months, and try to give you, I guess, some insight into what might be happening in the markets across the country. And today it is an absolute pleasure to be chatting with someone from Victoria. We've got the Real Estate Institute of Victoria President, Jake Kane, on the line. Jake, thank you so much for taking the time.
Absolute pleasure, Grace. Thanks for having me on.
Jake, what has the market been like for you over the last little while? Because I feel like everyone, from my perspective anyway, there's just not been much good news coming out of Victoria over the last little while, but I don't know if that's what's on the ground.
Grace, it's a really good observation. And I think there's probably, if I'm 100% candid with you, there's a fair bit of negativity in sentiment across Victoria too. Like the rest of the country, we, have worked our way through the cost of living crisis. Housing affordability has been, a key player or driver, I suppose, in some of the negative sentiment in the real estate market. Add to that a whole lot of changes to legislation over the past few years that have made the landscape for property investors and for renters way more complex and way more fraught than they used to be. Obviously, some great outcomes from some of those legislative changes, but also some confusion amongst the market. And when we have confusion, we have a lack of confidence. And when we have a lack of confidence, then markets don't do so well. So, yeah, in real terms, like the rest of Australia, again, we've seen an annual change with a negative impact on house prices or the median prices for houses and units. Units have done better in Victoria than houses, particularly in the last quarter. We've seen that from the September through December 23 quarter, seen units outperform houses, and we can talk about why that might be a bit down the track, but yeah.
Bit of a mixed bag.
Exactly.
And I mean, no negativity really lasts forever. And as we always talk about on this show, property markets are cyclical. They go through their ups and their downs. It is bound to happen at some point or another. Talk us through, Jake, some of the things. I don't want to spend too much time on COVID, but I feel like Victoria did bear the brunt of that as well. And I'm assuming that has had a little bit of a more lingering impact too.
Yeah, certainly. Yeah. Again, we want that to be in our rearview mirror, don't we, all of us? But it did have an impact, particularly when we talk about the rental market. So because of those sustained lockdowns and because of some of the regulations that corresponded with that in terms of timing, what happened was there's a real slump in terms of the rental market, and rents went down significantly. And coming out of that, 2023 was almost a perfect storm in some respects, right? We had all of these, macro conditions, the geopolitical instability, wars in Ukraine, the terrible situation in Gaza that impacted on, again, the financial markets across in an international context. And then closer to home, we had the massive inflation. We had changes to the regulation. And after that depressed period throughout the COVID-19 pandemic, in terms of rents, what a lot of investors did, which was to try and recoup and get back to where they were before in terms of the rental income they were getting for properties that, pre-March 2020 might have sat at a very healthy level, a sustainable level for them, but throughout 21 and 22 went down to a point where they're wrestling with whether or not they can hold on to those properties. So we saw in 2023, particularly in the second half, a lot of investors being forced into having to sell their investment properties, right? Which has that knock-on effect of making the rental market even more competitive than it was before. And when we factor in migration as well, which was huge in terms of 2023, the numbers coming in were almost unprecedented, then the competition for these properties, where we acknowledge in Victoria, we don't have enough homes for all the people living here right now. So all of those events together, perfect storm metaphor applies, made it a really tough time for people, particularly in the rental market, whether you're an investor or whether you're a renter.
Have you ever seen this kind of, I guess, all these events taking place at a similar time and just having such a market impact on the market in your career? Or does it feel like you're kind of operating in uncharted territory in some respects?
Yeah, absolutely. To have so many externalities or factors coalescing at once and impacting and putting pressure from all different angles, I haven't seen it before. We talk about the GFC. I think the impacts in Australia for the GFC were not insignificant, but they weren't quite as severe as they were in, obviously in the States and in Europe. That was pretty bad in terms of the impacts that it had, but the challenges, the feeling of angst and anxiety in the community I've never seen it at this level before. Yeah. But we've started really negatively. Let's silver linings, right? What I expect moving into 24 are different conditions, right? We're still going to have a lot of those factors that are influencing, certainly in the international context and the geopolitical context, those terrible events in other countries are still going to have an impact, but that will lessen.
Well, I might go to a break there and we'll come back on the other side and actually talk through some of the positive things that could be on the edge of happening in the Victorian market. Stick around after the break. Welcome back to this episode. We are chatting with REIV President Jake Cain. And Jake, just before the break, we were getting a little bit negative, but we're going to stick on the 2023 train of thought just for right now before we do start looking ahead to 2024. I'm curious, pulling back up what you said about the unit markets performing quite well over the last little while. And I'm wondering why exactly that's been the case.
Yeah, great question. Look, there's a few factors that drove the sort of drive for demand in units over houses, and that was particularly acute in the last quarter of 2023. One, obviously, affordability. It's front of mind for Victorians and Australians, the cost of living and consequently how much housing costs. What we saw were a lot of renters making that transition into being first home buyers. And why did they do that? Because rents went up so significantly in some areas where we had these renters looking at the difference between servicing a mortgage and paying their monthly rent and going, the gap really isn't that significant. This is the time. Let's do it now. We may as well at least be paying off an asset of our own. So we definitely saw a lot of that happening. We should also not forget that there is an increasing segment of the Australian population that are making a lifestyle choice to move into apartments, right? Because as newer apartment complexes go up, the quality of amenity, of gyms, of common spaces, of cinemas, wine bars, meeting rooms that you find in some of these complexes, they make that lifestyle really attractive, particularly for, people that are looking to downsize or just decomplicate their life. So we do see that segment of the population also driving the upper end of the apartment/unit market. Yeah, but those realistically, it kind of affordability was a key driver there. Some people just got priced out of a house as well. They might have been looking, we had 5 interest rate rises, that interest rate rise in November in particular, which sort of came out of a cycle where we thought we might have had some stability. That sent a cooling effect through the market here in Victoria, but it also pushed some people that might have been looking for a small entry-level house down into a more affordable solution being an apartment, which could be within their borrowing power.
And I'm assuming this is a trend that you expect to continue for the year ahead. Obviously, affordability concerns, while we might see some reprieve from rate rises in 2024, that affordability issue is not going to just disappear overnight, is it?
No, you bang on there. Look, the last inflation figures were promising. It looks like the interest rate rises are now starting to have a genuine impact in terms of inflation. But as we've discussed, those international factors will continue to keep prices on a lot of stuff high. There's not, we've spoken about it, there's not enough homes for people to live in. And construction isn't going to meet those needs anytime soon. We had a housing statement out from the Victorian government, which has some ambitious plans to address the shortage in housing, but that's a 5-10 year plan to realise, and they've got a lot of hard work to do to make that come to fruition. So you're absolutely right. We should expect that to continue, even if there is stability in the interest rate market. That said, look, even though there's a growing cohort of people that are either being forced to because of affordability or choosing to move into more affordable housing, i.e. units, apartments, the overwhelming majority of Australians do still hold that ambition or that dream of owning a house, having the living room, space to breathe, whether they want to have a family or not, to just be with their partner and have pets, that's the ultimate ambition. And I still think that we'll see strong demand when more houses come onto the market in 2024. I think a lot of people held back from going into the marketplace, only the people that really needed to transact, to sell their property or move up or down or change over. They were the only people really that got in. The sort of more, if I could get a decent price or now's the time contingent, they stood fast and just sat to wait and watch and see what would happen. And I think we'll get, once interest rates stabilise, probably more people coming on to sell their houses.
Okay. So what was the volume like over the 2023 year when it did come to the amount of listings that you were seeing, if it did feel a bit depressed and just different, I guess, to probably there was a flurry of activity back into 2021 and 2022?
Yeah. We coming in and out of those lockdowns was pretty wild. Yeah. So we had, we'd go 100 days of lockdown with absolutely nothing happening. And then just everyone like, bang, let's do it, right? And those were crazy times, particularly for sales agents, who had been sitting there doing nothing for 3 months, essentially just kind of going, oh my God, is this ever going to end? Oh, please, and then they came out and they were just absolutely inundated. And then we'd go back down into lockdown and then come out again. So it was, that kind of rubber band snapping out kind of reaction. 2023 we were like 40% down in terms of volumes in the early stages of the year. So, from a buyer's perspective, from a seller's perspective, they're looking out there going, whoa, and certainly from a real estate professional's perspective, we were like half the volumes that we'd normally have it in any given year. That changed in the second half. Those the pauses in interest rate rises, and let some people say, let's get back out there and put our property on the market. But they were still below what they had been in, 2021, 2019, 2018. And what we did see in the second half, throughout the year, the auction clearance rate, which is a measure we use particularly in Victoria because we're, a big auction state, that sat around 75% as an average clearance rate for the course of the year, right up until the sort of last 4 or 5 weeks. Normally, that would be an indicator that it was an incredibly stable, if not strong year, right, to get that kind of clearance rate. But it was distorted by the, supply and demand factor there, that the supply was really low. Demand was still fairly stable. So that sort of created an artificial result. In the last 6 weeks, as the volumes went up and we started seeing weekends where we had north of 1,000 auctions every Saturday, that clearance rate, particularly after the November rise, started to drop down again. We'd been sitting sort of early 70s and it went back down into the sort of mid to high 60s, depending on whose data you look at.
And what was the impact of that on the prices? Because I'm sure, as we've talked about, there was a bit of negativity around, but lack of supply would have put a bit of a floor under that, wouldn't it? To some extent.
Definitely. I think that created a certain level of stability, for want of a better word, just because, the demand was still there. The supply was way down. So even despite these big factors that could have led to a significant, and as many people forecasted, like a much more significant drop in terms of house prices than actually eventuated, that the fact that there was supply shortages meant that the price drops weren't as dramatic as originally expected. So we saw across the 12 months to December 23, a 10% drop in the median price compared with December 22 on houses. Yeah. And just in the last quarter, that was about 2.2%. So that's houses. Units, on the other hand, they were about the last quarter only down 0.7%. And there were some incredibly diverse results across the state. So we saw areas down on the Mornington Peninsula, for instance, right, which saw a massive boom throughout that pandemic period as people fled the CBD and had a sea change or a tree change. We saw some suburbs down there come off by about 15.5% in terms of their median house price, but increase by around 10% in terms of their unit price. And so we've got that affordability dynamic there. Houses became extraordinarily expensive down in these seaside towns. Median prices, in the 2.5 million, 1.5 million, depending on, how prized the certain area was. But unit prices bucked that trend and went up. Across Melbourne, in Metro Melbourne, so we saw the southeastern and eastern suburbs outperform the west, the inner north, sort of, and just pure south suburbs, particularly in units as well, where we saw some incredible results. And some suburbs saw 35% increases across a quarter. Now, obviously, that's a sample of properties that are selling. It's not representative across the 12 months is a much better indicator, but double-digit growth in units for the year in plenty of suburbs.
Are there any suburbs in particular that you can give us some insight into that did do really, really well over that period? Because I'm curious, and there's probably a few people listening along that know a bit about the Victorian market and just which suburbs were seen as still desirable and maybe bucking that wider trend.
Definitely. So let's talk about houses first. So Fitzroy in inner Melbourne went up by 10.1%. Their median hit 1.6 million. Box Hill South, that's one of those sort of southeastern suburbs there, went up by 8.4% to 1.5 million as the median house price. Montalbert, which is very close to Box Hill, there went up by 11.7%. Their median price went to 2.3 million. Well, let's talk about the other in terms of units. Kew East, which is a sort of inner east suburb, went up by 22.5% for their unit median price. So they were at 1.1 and they went to 1.265 million as a median price there. Surrey Hills, another sort of inner east, and Canterbury, neighbouring suburbs there, both saw double-digit growth, 10.6 and 11.2% respectively, pushing their unit prices up to 975 and 968 respectively. Do you want to hear some of the worst performers? Yeah, I touched on.
I would love to.
The Mornington Peninsula before in terms of houses. Flinders, I was talking about those astronomical median prices, a 4.425 million median price. They went down by 19.2%, so almost 20% off to 3.15 million for the 12 months. Portsea, a similarly very desirable area on the Mornington Peninsula, went down by 15.9% from 3.45 million to 2.9 million. Closer to town, Albert Park, which is a sort of inner south, highly desirable location, went down by about 15.8% to 1.95 million. Yeah.
Is this normalization, or is it, people actually not being able to afford these areas? What do you think drove some of those?
Yeah, it's a really interesting question because we did see in terms of the absolute luxury market, and these are the kind of stories that you cover regularly, I assume, and get a lot of airways. Some of these astronomically expensive properties, the $40, $50, $60 million properties, sold really comfortably throughout the course of the year. But these other properties that sit in the affluent band, I think by most people's definition anyway, sort of $2 to $5 million range, which is, it's weird to say that. I remember thinking like $1 million property when I was much younger would be, the biggest mansion in the world, but now $2 to $5 million, unfortunately, in some areas doesn't get you that much. We saw those bands suffer a little bit in terms of how quickly they sold and what prices they achieved. For agents working in those areas and owners of those particular properties, they didn't transact with the kind of frequency or results that they have done in recent years. Again, I'd point that back to the affordability considerations we've spoken about. And again, people just at those levels, if you think about what a mortgage looks like on a $2.5 million property with 13 total rises over the past, 18 months, that's a pretty daunting prospect to try and service that, when you're not at 0.25% as the cash rate.
Yeah, it's a good point. We're going to take another break there, but we've still got plenty of insights to get from Jake. So we'll see him on the other side of the break. Welcome back to this episode. We are chatting with Jake Kane, president of the Real Estate Institute of Victoria, getting all the insights, all the goss on the Victorian market. And Jake, we've spent a lot of time looking at the 2023 market, and I believe that's a really good way to frame what's to come and give people an insight of what they can expect from the year ahead. Because obviously, while the market does go down a little bit towards Christmas, New Year, things get a bit quiet, it does then pick up sort of the way it's ended off the year. So what are you seeing at the moment? Are there any signs already of what 2024 could bring this point in January?
It's pretty early in the year to start making predictions, even though I love doing that. But if we look back at just the last quarter of 2023, and there were some trends that were starting to emerge, which we could expect to see continue on in the first quarter and half of 2024, in particular, that demand for units. As we've, spoken about at length, affordability is one of these big drivers or factors in terms of decisions that people are making around property. Units will continue to present a really attractive option for those people that are wrestling with what their budget looks like, what their borrowing power looks like. Add into that throughout some areas in metropolitan Melbourne and in coastal areas, there have been some developments underway which will see more apartment buildings, complexes coming onto the market and more, stock, for want of a better word, available for people to get into. So if you then look towards the renting side of the market, what's a concept and an initiative that people have been talking about more and more is rent to build. Now, there's been a few developments in the rent to build space that have been in progress for a while and that should come available in metropolitan Melbourne throughout 2024. The hope is that those additional homes will present more opportunities for renters, will lessen the incredible competition that's out there in the rental market right now and offer, high quality, modern, sustainable properties for renters to get into. So, yeah, that's what we're looking at in 2024, just in the early stages.
I mean, it does you sound very positive around what is to come over the next 12 months. And that's obviously music to a lot of people's ears because it has been a pretty tough period, not only in Victoria, but across a lot of the country over the last little while. So full steam ahead, obviously, for what's to come.
Absolutely. Yeah. One of the things, right, the kind of hallmarks of a stable market in the real estate marketplace is confidence, right? And if you could look at 2023, it was defined by a lack of confidence, of uncertainty, interest rate rises, geopolitical laws, legislation, etc. What 2024 looks like in the early stages, and from what we know from government, from economists, etc., we should see some stabilization in terms of interest rates, in terms of those external factors out there that have, as people adjust to the conditions, right, then people become accustomed to them and they understand them, and then we get stability. And a stable year, a balanced market means that it's sellers can sell with confidence, buyers can buy with confidence, and things kind of normalize, as you say.
Hmm. Before I let you go, Jake, do you have any insights or advice to those investors out there who maybe have been a bit wary of the Victorian market for the last little while as to, I know we've just talked about how positive it is looking ahead, but anything else that you want to add before we go?
Look, there are things that investors entering into the Victorian property market need to consider. I'd preface it by saying this is a highly desirable place to live and invest, Victoria. It offers so much in terms of quality of life, of amenity, of stability, security, right? All of the fundamentals of Victoria remain unchanged. There's a reason why Melbourne has, repeatedly been voted the most livable city in the world, right? And nothing about that has changed. The landscape for investors has become more complex over the past few years. A lot of the laws around renting have been updated or amended to improve rental conditions, right? That's been the intention. And that has certainly delivered in some areas. In some other areas, it's kind of made it a little more complex, a little harder to navigate. And that's been a massive job for property managers in Victoria to keep abreast of, understand, and in some instances interpret the legislation that governs the sector. But they've done that, and they are across those laws now, and they're across the requirements for owners, and they're there to support investors who come into the marketplace. Things to highlight: if you're thinking about short stay or short-term Airbnb, for want of a better expression, rentals, if you're looking to invest and put your property on that market, the government is introducing a 7.5% visitor levy on all income there. So if you've got $100 a night on your investment apartment, you're going to be paying an extra $7.50 for the levy. Now, the rationale behind that is that the government has a view that those short stay Airbnb type properties, that they're not available for traditional renters that are looking for long-term secure apartments. So that removes a lot of the properties out of that market. So that levy is intended to go towards the construction of social housing and more affordable housing in Victoria, which is certainly an initiative we applaud. More social housing. That's the government's responsibility. They need to build way more than they currently are, no doubt about that. But it's something that investors should be cognizant of if they're looking to get into that space. For foreign investors, the federal government's announced, and this will apply, I think, nationally, obviously, but, the fees for application have tripled. The taxes have basically doubled in that space. So again, the intention there is to have more property ownership by residents of Australia rather than foreign investors. But if you are a foreign investor listening to that, make sure that you're checking and that you understand what will happen there. And there's also an increase to land tax for second properties, i.e. investment properties, that came into effect from January 1. And that will have, again, a moderate increase in terms of what you pay each year on land tax. It can vary from, a couple of $100 through to, at the top end, thousands of dollars in additional tax. That's a temporary tax. And it's been titled under something along the lines of the COVID-19 Recovery Fund. It's to try and claw back some of the additional debt incurred throughout the pandemic there. So 3 things that people should get their head around, because it will moderately change the calculations. But the rental market right now is still bananas. Not great for renters out there, but if you're an investor, we have lines around the corner for properties right now. If you go out tomorrow, Saturday open for inspections, 60 plus groups trying to get into an apartment. Tens of applications on most properties as long as they're priced competitively. So there's always going to be someone to rent your property. We use the term safe as houses for a reason. It's the best asset class to invest in Australia, and certainly still in Victoria.
Jake, this has been so informative, so insightful. Thank you so much for taking some time out of your day to chat with us, giving a bit of an insight behind the scenes of what's going on in Victoria. And yeah, it does sound like a really good time ahead for that market. So best of luck to you. And I'm sure we'll be having a few conversations down the track about how it's all tracking.
Thank you so much for having me on, Grace. It's an absolute pleasure. And yeah, always happy to have a chat about what's happening down here.
Well, looking forward to the next chat already. I hope everyone else has enjoyed this episode as much as I have. Like or review us on whatever platform that you do listen to your podcasts on. Check us out on Facebook, Twitter, LinkedIn, and Instagram. And as always, make sure you're subscribed to our daily bulletins. That's all for today. Until next time, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.